Thank you for joining me. I'm Alex, and I want to talk about Nordstrom today. So, Nordstrom is a stock that I started buying in August. I think might have been late July. I mainly bought it for the dividend, or rather, that was a major factor in me buying it. Obviously, the PE was amazing, and the balance sheet didn't actually look terrible, but it was reasonable. It wasn't great. So what they do is retail, which is a problem because it's not essential retail, and so most of their stores had been closed for the current situation, so obviously not a great thing, and it actually cost them quite a bit of money, but not as much as I thought. So current price is $19.43, which gives them a market cap of $3 billion, and they are up almost 10% today, so quite the jump there. And current dividend yield is 0, which again is ironic because that's kind of why I bought them. It was almost 5% at the time. Current revenue $16 billion, which is slightly down. Earnings $496 million, which is also slightly down. And the current PE is 6 with a forward PE of about 6. So forward PE is actually higher than the current PE, but I round them anyway. So obviously they expected the following year, which is this year, to be worse than the current year, and that was pre-crisis. So not a great sign to begin with. Total assets $9.7 billion, total liabilities $8.8 billion, which gives them a total stockholders' equity of $979 million. And in the quarterly earnings that were released recently, the stockholders' equity is actually down to 400-ish million, if I remember that right. So they lost quite a bit there, but money is actually cheap right now, so I don't really see that as a huge problem. And if things continue the way they had been, and obviously they're allowed to reopen, so it's not that big of a deal, I think that they'll make it through the current crisis pretty much intact. Obviously, that depends on whether or not there's a second wave, whether or not there's a vaccine available soon, and whether or not there will be a huge recession, which could cost them a lot of revenue. So overall, obviously, for a growth investor, there is currently no growth. For a dividend investor, there is currently no dividend. And for a value investor, I think the balance sheet is pretty terrible. I think that they're just going to scrape by, possibly with a negative stockholders' equity in the current fiscal year. And so that's kind of a problem, but the PE is amazing. The earnings are reasonable. And I think that if we assume that there's going to be a quick recovery, they're going to do quite well. If there is not going to be a quick recovery, I think that they'll be struggling for quite a while, maybe a couple years or so. And at that point, I think that if you're intending to hold for about 10 years, then I think that's still a buy, because the PE is so amazingly low that I think it would still be a buy at the current price. Obviously, if they're shooting up another 10% tomorrow, it gets more dicey, but as long as the PE stays under 8-ish, I think that it would be a very interesting stock to look into for a value investor. I would also assume that if there is a quick recovery, they're going to restart their dividends quite soon, but who's to say if that happens? So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.